Good afternoon. This is Serge with TradeJolt.com, and welcome to another session of stock and options trading. Today I'm going to focus on Gilead Sciences, which is one of the candidates for a treatment for the coronavirus, so obviously it's very much in the news. I don't trade stocks based on fundamentals, believe it or not. I trade stocks based on technical analysis. But it's always good to know the background or the psychology behind any given stock. Gilead Sciences is is producing a drug called Remdesivir, which has had some very good preliminary results on coronavirus patients in their late stages of the disease and the very deadly stages when people catch pneumonia. In any case, as a result of that, there's been a lot of interest in the drugs, and the stock has gained on sales of the drug, and interest spiked recently on the report. We had a spike up. Let me see if I can show it to you here. We had a gap up on their latest earnings report, which was on the 19th, and the stock flew up from $75 up to $85 based on the preliminary results that they'd had on those tests and the optimism that generated. I want to show you a longer term chart to evaluate where I think Gilead Sciences was going even before we had this coronavirus and the recent Remdesivir breakthroughs. So on a long-term chart, we see that as the stock here was making much higher highs, going from a price of 15 back in 2008 all the way up into the hundreds by 2014-15. If we trace a 50-period monthly RSI, we see that that is also making higher highs. And if we take 100-period RSIs, we also would see that the slope is an upward slope. What that is telling me is that this retracement that we see here is not a permanent one. It's not a reversal of the trend. And so we should see a period of consolidation follow and then a move higher for the stock. And that's what we had. We had a first wave down here. We used Fibonacci levels to tell us where we expect the second wave, and it told us that it should be right here, and that's pretty much where we got it. At that point, there's nothing to say that we won't get more of a retracement, but we did. We got a retracement to the what looks like about right around the 50% levels of the low to high. The people who listen to this channel a lot know how much credence I put in RSI tracings. I think that they reveal a lot. I don't go so much by the 50-period moving average as many people do. I go a lot more based on the shape of the slope of the highs and the slope of the lows compared to price. In other words, I use RSI to tell me what price levels we can expect based on the historical price level that particular stock has achieved in the past when it was at similar RSI levels. So anyway, let's go forward. So we see that the long-term trend here of Gilead Sciences is an upwards one. We expect our bias is to the upside. Then when we look on shorter trades, let me first bring it here. This is using daily stock charts, and I'm sorry for the complexity of this chart, but I can't help what the chart tells me. I had a first wave here, a second here, and a third comprising a full fractal. That would have told me to expect a retracement at this point to either the 38%, 50%, or 68% level. We got a retracement down to the 68%, and then we saw the start to move up again. This entire three-wave pattern becomes a new fractal. From there, I would expect a projection, if it makes a higher high, which it did, beyond to the next Fibonacci projection from then, which would take us up to the 90, sorry, I'm getting a little bit blind here, the 99.86 level. We haven't received that yet. That's where I expect an initial high to form, based on the fact that this larger Elliott wave was breached right here. Now we had a rise almost to that level, a drop back down. These also reflected Fibonacci levels, but I'm not going to bore you with that detail right now. And then once that retraced down, we have a third level shown in the faint green here that expected to peak here, and that's exactly where we got the peak. At that point, you would expect a retracement of 38% and possibly 38% and possibly 68%, which would take it down to the 75 level. We still don't know which it will be, but it has retraced down 38% and is headed higher. If it breaches this level, which we think it will based on the fact that it breached over here, so our bias is that it will reach the second level here, which happens to be a price point of $87. And I guess that means that this price point here was not 99, but rather, let me make that bigger. Oh, I was reading that as being 99. It was 0060 because it was messing with the, those were actually reading the CCI levels of the chart above. So just disregard that for now. We're projecting out here, and that's a price point of $87.87. Let's say $88. Stocks tend to finish on even numbers simply because they're traded by humans, and humans can't count in fractions. So inevitably, the stock is supposed to read 87.87. It'll fall on 88. If it was 87.36, then it'll fall on 87. That's what you'll find most of the time. All right, so I would expect either from here or from a lower point down at 75, a retracement all the way up to an 87 price point and eventually a $99 price point. Let's try, and we're going to try and guess at a time frame because we trade options, and options are very susceptible to the passage of time. If we can nail the exact time period in which a stock culminates to a given Fibonacci high, then we can really make money with options. So let's see if we can try and do that. First of all, let's go down to even more detail to see if a smaller time frame, an intraday time frame, will give us any more information about whether this stock is ready to move higher or whether this is just a temporary retracement and it'll move then lower to 75. So I used here a 15-minute chart, and let me zoom. out a little so that we can see more detail. We had, well, first of all, we have a gap. People who know me know that I believe that a gap, a lot of people measure Fibonacci levels and waves from the lowest point that a stock ever reached, and there's nothing wrong with that. But I notice that there's an interim kind of Fibonacci level that happens on gaps. And you measure it from the lowest point to the point where the stock opened the next day. And that opened right here, not from the highest point and not from the lowest point it reached during the day, but from where it opened. So that becomes a full wave in and of itself. And then from there, you sometimes see retracements, and here we had a retracement of 61%, which is where we expect the retracement to be. And excuse me, I said 68% a few times earlier. I often make that mistake. It's 38% on the first level, 61.8% on the second level, not 68% as I said. Anyway, at this point, if we were to trace here, we can see that this is sloping down between this low and this low. Yet on a 14-period RSI, over that same period, we already have divergence. We have a slope upwards. And on a 50-period RSI, tracing from here to here, we also have an upwardly sloping RSI, at least a flattening RSI. That suggests here, tracing back 14 days, the price wants to go to around the levels it was. Can't really use this 14-day pattern because we have more than 14 candles here. When you're doing price tracing using the RSI, you have to be cautious about that. Let's try a 30-period RSI. Oh, excuse me, that was a moving average. Let me try get rid of this ADX. Get rid of this. Try a 30-period RSI. Get rid of some of our other stuff to simplify. Our charts. Okay, so we now see, I'll do one final thing. I'm going to put this one above my price chart. Yeah, so I can see where this traces out to. Okay, so basically what we were looking for is a 50-period RSI to see if that would tell us a little bit more. So we have a flattening here. It's not clear that it is flat. It might still be sloping down. But it looks to me pretty close to flat, whereas this here obviously tilted down. And the RSI from here to here is tilted up a little bit. So I think we're going to see over a period of 30 days or 50 days, we're going to see the price at least as high as it was between these 2 points. So at this point here, we knew that it was going to go at least to this height. Then we trace over, when it gets to that height, where's the RSI at? And if you look here on the 30 period, at that point, the RSI, when the price was here, the RSI was already up here, which suggested already a price right up here. So by the time the price gets there, if not more than 30 time periods have gone by, we can look down here at the RSI, and we can again trace over here, and I'm going to use the 50 period here to make sure there are not more than 50 candles here. Use a horizontal line, and we'll mark that line. And the last time the price was at that level was right about there. So that suggests that the price needed, but only needed, to move to this level here. It may move higher, but that's not revealed in this Well, you know what? I drew the line wrong. I'm sorry. There was the line. That's susceptible because that means, make this bigger. My wife would tell me to stop squinting and get some glasses, but vanity prevails. All right, let's see. Yeah. Here, on the 50-period RSI, we see things more clearly, and the last time the price was this high was right there. So that means that supports a price here of $82. You see how I get that? Now, by the time it moves to 82, we can then trace out more and see what that tells us. But for now, we expect to rise at least to $82, at which point a number of things can happen. We don't have clarity whether this is going to move down to a third wave down here at $75. I would say that odds are pretty even. This is a big gap that is hankering to be filled. Let's look at what kind of a play we can put, assuming it's not going to go down, and see what our risk reward looks like, and then we'll decide if we wait. Okay, so now what are we going to shoot to get? Well, we already know that we expect this to reach a price level. What do we have here? A price level of $87. It's probably going to also make a pause here. We can't tell what that price is. Second. That's a price level, looks like about $90. Excuse me, I'm looking for this lower price, about $87 for that one. And the reason we're looking at different levels here is because it allows us to use shorter time periods. I like to use as short a time period as I can when I do options, because the bang for the buck is that much larger. Plus, if I can make gains and compound those gains over a shorter time period, I'm going to make a lot more money. So we can even try an $87 bet. So it reaching $88, say, and let's try and cast a time period. That is much trickier. And reduce the screen size here a little bit. And I'm going to attempt, first of all, I'm going to use the software here to add some extra bars here to the right. Okay, I've got this extra space to draw on. And then I'm going to go into draw mode. And let's just try and project with some cycles. Let's see if we recognize any kind of patterns, high to low. So lows here on a long-term basis. Let's see if any patterns appear. So these should be lows. That does match this low close. And then the highs would be, of course, the periods in between. Let's move this over a little bit. That would be a high here, suggest a high here that does not match at all. But another high here is pretty close. This is not a science, guys, and if it is, I don't know it. I'm trying to estimate how long I think it could take to get to this level. Just eyeballing it, each of these is a day. This thing has moved up by a good 10 points a day, and then it ticks back maybe 5 points. So I would say it gains 5 points every 2 days. So for it to move from 81 to 87, it could do that in under a week. That's just to 87, to the former high. It's very likely to make a pause here. Let's see what that would do for an option trade. So based on it not getting higher than 87 within, I don't think it can do this in 3 days, but let's go to the next level. I think it'll reach that by Monday or Tuesday, but the options don't expire on Monday or Tuesday. I think it can easily get to the second level by the end of the week. That would put us at a level, as we said, I think we said it was $87. Let me double check that. Projecting up, where are we? Yeah, $87.80, so $88. Let me try using that as my fulcrum on an option trade. I'm going to do what I call, or what is called, a broken wing butterfly. So we'll use $88 and we're going to set the time period, not in 3 days. We might go for 10 days. That might be cutting it short. We're going to look at that and see what it does, and then we're also going to look at a period of, what is it, I think 16 days from today. We'll do both. So let's first set up a call. We're going to buy. And what I'm going to do here, 88 is my fulcrum, or my center point. That's what I'm going to sell. And I want to have what I call a lopsided or broken wing butterfly. I want to have more distance between the 86 and the 88, and the 88 and the outer wing of my butterfly. So if I use 86 and 88, I would use 89 there, or 89.50, it doesn't matter. I'll try 89 first. We'll see what that does. Okay, and it's after hours as I'm writing this, so not all the option prices show, but they still will work in the, they may show up in a few minutes. They will work in our, we can use the last price at closing just as an idea. We're going to collect about $4.58 selling these two, and it's going to cost us $170 plus $3, about $470 to buy that. So that will give us, the difference here is a $1. We're making $2 here, and we're giving back $1 there. So basically, we're looking for a $1 spread if this all goes out of the money. If it stops at 88, as we think it could, then we could make $2 on the trade. And that's a trade that's going to cost us the difference between those two. So again, 458 less 470. That's about 18 cents if my math is right. Let's see. Let's do a new what if. We sold 2 of those. We're going to buy 1952 and buy. Okay. Make that full screen. Put the underlying so it gives us prices instead of percentages. I like dealing with prices better since I have my price targets. And we are going to buy 1 of these, sell 2 of these, and buy 1 of these. And we're going to advance the date to the date that this expires, which is May 1st. There we go. That is our very, very elegant trade. I like this. Now, somebody who does traditional options might think, that's a horrible trade. You only have these orange lines represent statistically, based on 1 year's data, what the likelihood is of the price moving beyond this orange line. So the orange line is set at 5% extremities. So theoretically, it only has a 5% chance of going above, what is that level? $87. But that is based on the last year's volatility. But volatility is nowhere near the levels it was last year. Look, it used to move maybe 1 point or 2 points a day. Now on some days it's moving 15, 20 points. You should realize when you're looking at your options mapping software or estimation software that it's using 1 year criteria. So it's giving you false information, I think. I used to trade based on this, and I was surprised that I was losing money so often. Since I use Fibonacci projections, which, as you obviously realize, are using the current time period because they're projecting up from the current movement, they're going to be much more accurate. And I have been actually, in the last 3 months that I've been using this methodology, I would say I've been right about 60% of the time. When I'm right, I'm sometimes making 10 times what I'm risking. What we have here, let me also add a date, an interim date. So this expires on the 1st of May. Let's see what this would be next Wednesday, about a week from today. That would be this purple line. Okay, when we do that, we see that this trade, I'll make it a little bit bigger yet, there we go. We see that this trade risks a whopping $8. Don't go by this value at risk. It's just wrong. I don't know why TWS software can't get that right, but it's not right. It's not a $14 risk. It's an $8 risk. You're spending $8 on this trade, and at no time, under no circumstances, are you going to lose $14. So, all right, enough of that. Just another thing I learned, if you're trading options, don't rely on your options software to be correct. There's reasons why they have all those disclaimers on the software. The software makes mistakes, and sometimes it shows me totally illogical graphs. So you always want to understand the basics of why something has a certain value at a given time. This one has value because you're buying. You have the right to buy at 86. Somebody out there has a right to buy it off you at 88. And you can buy it off somebody else at 89. So your total cost and your total loss is exactly defined. All right. So basically, what happens? If we put this trade on, we could possibly lose $8, but I think there's a better than 50% chance of making, get this, if it ends in the range that I think it could reach, which is the $88 range, I could make anywhere from, there I go again, needing to squint. Oh, this doesn't get any bigger. I'll have to squint, guys. What is that, $190? Could make $190 with $8 at risk. That's the highest. I would have to nail, it would have to close at exactly $88 for me to make that. However, and that's the reason for that is I have a $200 spread at 88. This falls worthless, so I make $2. This expires worthless. This expires worthless, and this is worth $2, and I paid $8. So the amount I make is 200 minus 8, which is $192 if my math is correct. And that's the maximum you can make on this trade. I like to look at chances are I won't exactly nail a range. I like to take about half of this, and my expectations is I'll get somewhere in this range, probably $90 is what I'll make. Well, 90 is still 11 times what I have at risk. It's an 11 bagger. Okay, so I will be putting on this trade. Now, let me Let me explain. If I'm wrong and it moves way up super fast, you have some other test that comes out and it's brilliant results. Well, at every price to the right, this thing is going to make $100. You spent $8, so you'll make $92. And you don't have to worry about it. If it were a butterfly with even spreads between the two, you would have to nail, you'd make more money if you were right, but you'd have to nail how high it could rise. And with stocks as volatile as they are right now and as unpredictable as they are right now, I don't like to put an upper or a lower bound on what stocks can trade for. So this is a great trade. I'll put it on. Each position, got to decide how much. I'll probably, for my smaller clients, where I typically like to risk maximum of $100, I'll probably just put probably maybe 3 positions on here. Let me see. Maybe just 2. That would give us a $23 risk. It'll cost us $1 to put on the trade. This is with Interactive Brokers. And that's kind of worth my time. $23. Chances are they'll make 300, yeah, or 200. That's a decent trade. I like it. That's how much I'll risk on this. Now, what happens if we get a retracement of 61.8%? What if it comes down to the $75 where there's a lot of resistance and a floor? Basically, what will happen, it may go down a little bit. If it happens in a day or two and for some reason the news has changed and I come to doubt the trade. Look at this. If it goes down, let me advance another day here. Just 2 days. I want to advance 2 days out. Just to show you how forgiving this trade is. Look at this. So the price goes from today's price of 81.31. It goes down to $79. It goes down by $2. Well, look, that's my floor. It goes below 79. It goes lower than my. Let me show it to you here. Excuse me. It goes lower than this wave low. For me, that's a sign that it's breached that and it's going to go down to this $75 level. So at $78.40, I could consider taking off the position. If I did that, let's see, at $78.40, I'm still making $50. I'm going to have to pay $2 to get out of the trade. Now, it could be below this, but many times it's above. Now let's say it's lower. All I've lost is $23, and that's if I close it. Why do I have to close it? I still have 2 days have passed, and it's down here. If it breaches this, it's going to go down fast. Look how long it took to go from here down to here. That took a day and a half. So 2 days it could be down here, 3 days at the max. And then it still would have right here another, what is that, 8, let's see, 5-1, today's the 22nd, 3 days have gone by. It'd still have another 5 days, well, 3 days if you don't count the weekend, to make it up here or to make it in this territory. And if it makes it, if it can make it to this $85 price tag, in 3 days, I'm already profitable. If it can make it up here, I could still make money. Now, what will I do if that happens? First of all, if I can close the trade at a profit, I'm going to close. I'm going to close at a profit. I'm not going to hope that it reaches this and I'll make all this money. No, I'll take my profits. It's breached this low, but if it's a loss, and a small loss, I won't close it. What I will do, I'll wait. When it comes down here, I'll look at the charts again, and I'll put on the same trade. And guess what? That trade, when it's down here at 75, I bet you that trade for one position will cost me about $1. So I'll probably put on an additional 7 positions, so I'll be holding a total of 10 positions at that point, which will have cost me 25, and let's see, 7 more at $4.28, about $54, 55 including commissions. And look at this. If I'm right, I can make anywhere from, what is that, $1,900 to $1,000. At that time, it'll have been 55 at risk. Those are just phenomenal trades. If you are wrong, you can be wrong literally, how many times? 50 goes into 900, 18 times. You can be wrong 18 times, be right once, and you're still breaking even. Okay, that's it. I hope you learned something. I hope you liked the video. If you did, please smash the like button and be sure to subscribe, because I don't publish these videos on a regular basis. I try and publish them 2-3 times a week, but you don't want to miss the next one, because these are trades that we are putting on for ourselves and for our customers, and we believe in them. That's not to say they'll make money, but they're great learning opportunities. I don't recommend you trade these if you have never done options. There's a lot of mistakes you can make. The way that we do the options have limited risk, but you make one little mistake, and you can, in execution, you don't use limit orders, you don't get a fill on one position, you try and leg into it. There's quite a few mistakes you can make as a beginner. And that can cost you dearly, and you can lose a lot of money. So please consult with a professional before trying this trade. That said, I wish you happy trading, and since this is the year of the corona, above all, I wish you safety. Thanks for joining me today, and I look forward to seeing you in the next session. Happy trading.